Now, we all know men can't have babies, but incredibly, our health insurance covers us for that eventuality. Unbeknownst to many of us, maternity cover is included in everyone's health insurance, which means we are paying for something that we will never get to use.
But why is this the case, and is it possible to opt out of this cover? Personal finance expert Carl Dieter is here now to explain more. Good morning to Carl. I'm laughing, thinking now that Martin is paying for something that he's never going to be able to utilise.
Something incredible happens.
How is that
can
the
spot
case?
The contrast here this morning. Basically, the Health Insurance Act in 1994 meant that there were certain universal benefits that had to be in every policy, and maternity was one of them. So even though men can't have babies, it actually has to be within every policy. The same kind of universal access is one of the reasons also why people save money by switching to the corporate equivalent plan, which means that even if you're not in a corporation, you can get the corporate rate by simply asking for it. What I would say is before the guys get outraged, that women are also covered for some prostrate examinations, and obviously they don't have those either. So
the books are balanced a little.
Yeah, there is a little bit of balance.
So there's no way men can get out of it, though, basically.
No, and the thing is, it is actually at a cost, because any benefit within health insurance does eventually get embedded in the price. But like I said, you just have to take it that you win some, you don't win some. On the whole, it is a pretty fair system.
There are a few other things that come under this minimum benefit umbrella. Well, we've already spoken about two of them: maternity for men, prostate for women. But there's other things, psychiatric care and things like that. Yeah,
everybody has to have access to at least 100 days of psychiatric care. Fortunately, most of us don't need that, but it is something that's there within the provision of the minimum standards in health insurance. And I think that's a very good thing, because what it does mean is there are eventualities there that you can't plan for. So sometimes people have children and that's what they want, and sometimes people know that there's a history of prostate issues in their family, and so that's a benefit that's already there even when they're taking it out. But a lot of people don't know what their psychiatric health is going to be like throughout their lives, and for that reason it's actually a very positive thing to have that within the policy.
Okay, so that's a good minimum benefit.
Yeah.
Smokers and health insurance, they're obviously going to pay more money, but how much more money?
It can get pretty big, as a matter of fact. Up until about the last 3 or 4 years, smoking was one of the biggest causes of premature death out there, in terms of things that you could predict and say that this certain activity results in you dying. Actuaries are people that basically do the mathematics behind your life expectancy, and usually they can take your age, your occupation, and whether you're a man or woman, and predict within about 5 years of when you're going to die, which is obviously a horrible task, but it's useful, because then you can buy life insurance as a result of that. In the past, smoking was the really big one. Nowadays, it's actually obesity. People's weight is going to kill them quicker than smoking did previous generations. Currently, we're raising a generation of kids who might actually not outlive their parents because of the amount of body fat they're carrying. It's an amazing thing, but smoking, to answer your question, can add on thousands to your costs, irrespective of the cost of smoking, the cost of the health, because of the fact that it results in a shortened lifespan. And that's something that people really need to be aware of. Now, getting back to what actuaries do, there is an interesting thing happening, that people are starting to live longer. Healthy people are starting to live longer. And because of that, even though as you get older, life insurance gets more expensive, you might actually save money by double checking the price you're paying for your current life insurance, even though you're a little older now, because rates have come down. It's tricky to explain, but if you're only buying insurance for the next 20 years, and now people are saying, well, you're likely to live longer than you did before, the period of risk for the life insurance company is actually a little bit safer, and because of that, it gets cheaper. So there's ways to save money, and one of the big ones is don't do stupid things like smoking, because all that does is send you to an early grave.
Well, you know, if you can stamp out the weed, stamp it out, because
is there a figure of how much more it costs smokers?
Well, typically there's different ways that life insurance works. So sometimes you might have a medical issue that creates what's called a loading, and that means that you pay a certain higher amount. Typically you see things like asthma, any kind of health history, diabetes, etc., and that can multiply it up. Smoking, the amplification in the price tends to be around the 40% mark, but it's kind of dependent on your age and specifically if it's found with something else. So if you're a diabetic who smokes, you'll probably be refused from cover. And this is something that I benefited from because I used to be a smoker, which is why I'm such a vehement anti-smoker now. And I tried everything other than voodoo and bloodletting to quit. It's an incredibly difficult habit to stop, but I did it, and my life insurance got cheaper.
Okay, we've mentioned it just briefly a second ago. Shopping around for life insurance, and you said the rates are good, and this is a good time to be doing it.
Yeah, people do shop around for insurance, which is good. I mean, it's great to see because we're constantly telling people, go out there and compare what's out in the market. And because insurance products are not a tangible thing, it's quite easy to just get your renewal letter and accept it. People are good at shopping around for general insurance, in other words, house insurance, car insurance, but they're terrible when it comes to shopping around for life insurance. I don't know why that is, but it tends to be the case. And for that reason, what we are seeing again is because of some of the changes that happen in life expectancies, the cost of reinsurance, who are the insurance companies who insure the insurers, all of these things are live and moving, and because of that, the cost of life insurance has actually come down in the last few years, which is why you could be better off in some cases up to about €10,000 over the life of the policy by shopping around and getting a new one now.
And better off as well if you don't write any checks these days, because writing checks is costs us about €40 a year, is it?
That's what, yeah. When you add in the stamp levy on checks and then the actual fee that you pay to use a check, it's about €40 a year. Now, when you compare that to the cost of having a credit card, also €40, bank charges can actually start to add up quite rapidly. And what I would say is that if you have a preference for not paying by direct debit, which I don't like paying by direct debit, because if I ever want to argue about a bill, there's nothing more powerful than not paying it to get them to listen to you. But actually, to set up your online banking to pay bills is a much cheaper way of doing it than physically writing a check. And that €40 doesn't actually factor in the cost of posting the check or anything like that. So again, if you want to keep control, you don't have to go on direct debit, but just don't use checks. Use electric banking.
They're going to try and phase checks out, I think, by 2016. Is that the plan?
Yeah, there's a lot of really interesting stuff happening in the whole area of money and money transactions. This year, we're going to have the first. Forgotten the name there, transponder cards, where you just, when you go into a shop, you just hold it up. You don't have to enter a PIN or anything once it's below a certain amount, and you can just pay for it and walk out. Now, there's a lot of intelligence built into the electronic payment system. So if you've never bought anything in Dundalk and suddenly there's lots of transactions happening there, then you will be asked for a PIN. But if it's in a shop that you go to every day and it sees similar amounts, you won't be. And that's something that will speed up queues and allow you to use these cards. Because it's frustrating at the moment. Sometimes you walk into a shop and you're told, oh, you can't use a laser card because you have to spend more than a tenner. As well as that, the thing is, there's a greater risk in carrying cash, and the cost of actually using money is huge. People don't realize this. The Mint, who create our money, 80% of the money that they spend is used on making what? Here's a quiz for you. What do you think they spend it on? €50 notes? €2 coins?
Okay, I would say...
Tenners.
I'd say the coins.
Tenners, which coin?
€2.
No, 1 and 2 cent coins are over 75% of the cost, because people get 1 and 2 cent coins and put them in a jar. So everything in the payment system is going to start to change. We are moving more towards electronics, and it's a very exciting space, and it will be good for consumers as well.
Okay, well, Carl, as ever, thank you so much. We look forward to those transponder cards when they come. Thank you. Now, coming up, they fought for the Allies in World War